Then let's start with Tiger Brands, right? So Tiger is, of course, the one which is the market leader. It is a company with a market cap of 57 billion rands. That's sizable. It's a big player in Southern Africa more broadly. It's expanded into Nigeria. We're going to talk about that in a minute because it's got a bit of a bloody nose so far in Nigeria. About half of its production relates to basic foodstuffs. That's maize-related products as well as grains, and then of course it has a substantial bread division. But the branded goods are an extremely varied portfolio, everything from Jungle bars all the way through to Oros and Energade as well. Price earnings ratio 16.57, dividend yield 3.18. Wayne, what have I left out? I mean, this is the market leader by scale.
Yes.
Where did it come from? Give me a sense of its history.
It's been around since I've been in the market. It obviously was much bigger. They used to have Adcox in there, the unbundled Adcox from
it.
it.
Spar in there as well.
So it was a huge
and
conglomerate.
It was part of that industrial conglomerate with Old Mutual as well, wasn't it? With ICS Foods, and it had pyramid structure,
that actually
CG Smith.
That
might have cleared all of that rubbish away.
That might have been a little bit more before my time. I remember CG Smith quite well because they were
Nick
big sugar cane.
Of course, was the guy that built it into the giant that it is today.
Look, I mean, it's really got arms and tentacles going into every aspect just about of consumer expenditure in the country. And that is one of its strengths, but unfortunately it's also one of its weaknesses. It makes it it's actually a very cyclical business.
Yeah.
But the real turn in this one is Dangote flour mills and the Kenyan operation. Dangote in Nigeria is the big one.
So what happened with Dangote is that they waded in there, they bought that business out of an industrial conglomerate, Aliko Dangote. It manufactures pasta and other grain products.
It's mainly a miller.
But when they bought it, whatever they paid for it, they've written it down, and they found basically that it had dodgy financials, it had all sorts of
dodgy
fraud
plant
and corruption going on in its procurement. The marketing was a bit of a mess.
No, this was a most unfortunate acquisition for Tigers. It truly was an unfortunate
But have they now reached some sort of ground zero?
Well, we hope so. Well, we hope so. I mean, at one stage, their own product was so poor, they didn't use the flour from their own mills in their Nigerian consumer products. They actually brought it out from South Africa because it wasn't up to standard. Look, I think they're over the worst as far as their actual company is concerned. I don't think Nigeria as a country is over the worst yet. So although they might have sorted out their actual operation there, I think the country is going to give them a headache.
Not a good time for Nigeria at the moment with the oil price
and I mean, they had huge foreign exchange write-offs here, over and above all the problems they were anticipating. They also had loans in dollars. They were all short-term loans to finance essentially their stock. But they're in dollars, and of course the Naira has taken a complete walloping against the US dollar.
Well, let's bring it back home. So as far as the core business here in South Africa is concerned, I'm assuming there may have been a bit of pressure and margin movement because of maize prices going up or going down. But that will come right in the end. Things like Koo, the fruit business,
it's fantastic,
very strong. All of these other things, I mean, Escort, all of the bacon basically, Enterprise and all of that comes from this business. All of the stuff, mayonnaise.
Every time you go shopping, you buy Tiger Brands products.
You don't even know it.
It's a very good thing, but it is still a cyclical consumer food-related company. And at the end of last year, if you look at the share price, it had a fantastic 2014.
Well, let's get the share price up because you can see there it had a bit of a run up at the end of 2014, as you say.
Strong run. And then the PE got to almost 20. And quite frankly, a price-earnings ratio of 20 is simply too high for what is still a cyclical company, despite all the consumer brands that they've got. And then throw in all the problems they're having in Nigeria and in Kenya. I mean, in Kenya operation, it looks like there was fraud and all sorts of things going on there as well. 16, 15 price earnings ratio is probably about the right number. And it's getting there quickly now.
I want one more point, and that's to put the management team on the table. So Nick Dennis left under a cloud because of the bread price fixing saga. Peter McClare then comes in, very experienced CEO, been at the SABC, Chamber of Mines, also so good strategic thinker. Funka Ngidaro is the FD, she's Nigerian. Then there's Noel Doyle, who was with the company, then came back. He's a good operational manager. And then they brought in Grattan Kirk, who's also a guy that's been around in the sort of industry. That sounds like as deep a team as they need. Is there? I do know though that there have been some people that voiced concerns.
Well, it's all about Dangote.
Yeah,
They made
you're
the
right.
decision, and that's hobbled.
So
that's
when you
hobbled
drop a
it for a
clanger
while.
like that,
That's
then
a big
unfortunately,
clanger. It's a big clanger. Look, I mean, no one can forecast the oil price, so you can't blame them for the Nigerian economy tanking. But they must shoulder some responsibility for the actual asset that
writing
they
a
bought.
big check.
Yeah.
Okay, but now as you can see there, it's hovering at 300 rands a share. The question is, under the current environment, going hot or
I'll
not?
wait a little bit. As I said, the price earnings ratio is now approaching some sort of reasonable level
Yeah.
because there are really quality assets in this.
Yeah.
But I would sit back. We don't know what's going to happen to Nigeria. I mean, the currency could fall another 25%.
Yeah.
The oil price can go down another $10.
Sure.
They've got big problems in Nigeria.
So you're not hot on this one.
No.
I'm going to go with hot all the same. You know, we've got quite significant client investments in this one, so maybe I'm a bit biased, but my sense is they are past the worst.
Yeah. No, look, it could easily be.